For millennia, gold has been this legendary thing, right? The stuff of myths, the reason for wars, the ultimate symbol of wealth. But what if its real power today has less to do with ancient treasure chests and more to do with the complex world of global finance? So today, we're going to look past all the hype and really dig into what drives the value of gold in our modern world.
You know, the artist Salvador Dali, he really got the psychological hold that gold has on us. And that quote, it just perfectly sets the stage for what we're talking about today. Understanding the very real power this metal has in the global economy and what actually gives it its value. Okay, let's start with a number that's kind of hard to wrap your head around. According to the World Gold Council, this is it. This is the total amount of gold that has ever been mined in all of human history. Just think about that for a sec. Every king's crown, every pirate's treasure, every single piece of jewelry from every civilization, it all adds up to this one number. Now, over 200,000 tons sounds absolutely massive, doesn't it? But here's the truly wild part. If you could somehow gather all of that gold together, it would fit inside a single cube that wouldn't even cover a tennis court. This incredible, mind-bending rarity is the absolute foundation of everything we're about to talk about. It's why gold is, well, gold.
All right, so here's our roadmap. First, we'll get into why gold has fascinated us for so long. Then we'll look at who's actually buying it today. After that, we dive into the real nitty-gritty, what makes the price move. We'll even look at a super surprising new angle for gold. And finally, we'll get practical and check out the different ways you can actually own it.
All right, first up, gold's enduring allure. Let's figure out why this ancient metal still has such a grip on us. Okay, next let's look at the world of demand for gold. Who's in the market and what are they doing with it?
This chart tells a really interesting story. So yeah, jewelry is still the biggest piece of the pie, almost half. But look at that second slice, central banks. They've been on an absolute buying spree, snapping up gold at double their historical rate. That is a huge signal to the market. Then you've got investors taking another big chunk. So this is not just about pretty necklaces, it's a serious financial asset.
So where is all this gold actually sitting right now? Well, this gives us the breakdown of the entire stockpile. And yeah, jewelry is still number one. But check this out. A massive 39% of all the gold ever mined is just held as a financial asset, locked away in vaults and safes as bars, coins, and official reserves.
And now for the main event, the price puzzle. Let's decode what really makes the price of gold tick.
So, what is the secret sauce here? It's not some ancient mystery or just a gut feeling. In today's financial world, the price of gold is really driven by a few key, interconnected forces. Let's break them down. Okay, think of it this way. Gold is an asset that doesn't pay you anything to own it. No interest, no dividends, it just sits there. Now, if you could put your money in a super safe government bond that pays you, say, 5% interest, suddenly holding that lump of metal that pays you zero doesn't seem quite so attractive, does it? That's the opportunity cost. When interest rates are high, you're giving up a guaranteed return just to hold gold. Now, to get even more specific, the pros look at something called real yields. A key benchmark for this is U.S. TIPS, that's Treasury Inflation Protected Securities. Basically, it's the interest you earn on a bond after you account for inflation. And there is a really strong inverse relationship here. When those real yields go down, gold tends to go up. When real yields rise, gold tends to fall. It's one of the most reliable indicators out there. The second huge factor is the US dollar. Because gold is priced in dollars all around the world, they have this seesaw relationship. When the dollar gets stronger against other currencies like the euro or the yen, it literally makes gold more expensive for anyone buying it with those currencies. That can push demand down. And a weaker dollar, it has the exact opposite effect. It makes gold a relative bargain for foreign investors. This chart here from UBS kind of shows how all these forces play together. It's this constant tug of war between things like real interest rates and the strength of the dollar. As you can see, it's not a simple cause and effect. It's more like a complex dance of financial forces that all come together to determine the price of gold. And of course, there's the wild card, the human factor, fear. During times of geopolitical turmoil, economic crisis, or just high uncertainty, investors tend to flee from what they see as risky assets, and they often pile into gold. This safe haven demand can cause the price to spike, sometimes completely separate from what interest rates or the dollar are doing. All right, now for a twist I bet you didn't see coming. Could gold, a metal we literally dig out of the ground, actually be green? It sounds kind of crazy, I know, but the data here might just surprise you. So, a study from the World Gold Council found that adding gold to an investment portfolio can actually lower its overall carbon footprint. This chart shows how, as you increase the percentage of gold, the portfolio's projected impact on climate change actually goes down. Why? It's pretty simple, actually. Once gold is mined, it's done. It doesn't produce any more carbon emissions. Unlike a company that's constantly operating factories, a bar of gold just sits there, making it a surprisingly low carbon asset to hold.
So, if you're interested, how do you actually own gold? Let's take a quick look at the different ways you can get in on the action. This table gives a really great side-by-side comparison. You could, of course, buy physical gold bars or coins. The pro, you actually own it. It's tangible. The con, you've got to store it, insure it, and the buy-sell prices aren't always great. Or you can buy shares in a gold fund or an ETF. Super easy, very low cost, but you don't actually hold the metal yourself. And the third way is buying stock in gold mining companies. This gives you the potential for higher returns, but you're also taking on the risks of that specific business, not just the pure price of gold. So let's put all the pieces of this puzzle together. We've seen that gold's value starts with its incredible rarity. That value is supported by a really diverse group of buyers, from central banks to jewelry makers to investors. It's priced as this complex dance with interest rates, the dollar, and global uncertainty. And finally, there are plenty of ways to own it, each with its own pros and cons. The picture should be a lot clearer now. In the end, it really all comes back to this: a tangible, incredibly dense, and unchanging element that has served as a reliable store of wealth through the rise and fall of countless empires.
So, I'll leave you with this final question. In a world of cryptocurrencies and purely digital assets, is gold just an ancient relic? Or is its ancient, tangible nature the very thing that makes it a timeless asset for an uncertain future? The answer, I think, is still being written.